Are there signs that the US government shutdown is finally coming to an end? Hello and welcome to Morning Markets. Today we're going to focus on the US government shutdown and the implications for that for the Federal Reserve and interest rates. But also we're going to focus on key data from the UK and China which will influence financial markets. The US government continues to be in shutdown. It's the longest shutdown in history, but there have been some positive developments over the weekend that suggest that there's light at the end of the tunnel. We've seen that the Senate has passed a bill to allow the government to reopen by giving them spending, much needed spending for the Congress, but also Veteran Affairs and also for the Department of Agriculture. And this spending will last at least until the end of January. Now, we're not there yet in terms of reopening. It still has to pass the House of Representatives. It also has to be signed off by President Donald Trump. But it is an improvement on the current situation, and markets have actually taken this well this morning. So if we look at Asian markets overnight, they're up anywhere between 0.5% to 1%. If we look at what US equity futures or what the markets are expecting to open with, they're expected to be up anywhere between 0.5% and 1%, which is good news. It has been a challenge this period for investors with the lack of tier one economic data, where we haven't had inflation data or labour market data from the government. It's been a challenge also for the Federal Reserve, the body whose role it is to determine where interest rates should be. And it's a challenge thinking about whether they'll cut interest rates again in December, given the lack of economic data. So as soon as the government can reopen, that data can come through and really inform whether they can cut interest rates again this year. This week we'll have speakers from the Federal Reserve. We'll have many of them, and we'll be looking for little clues in terms of how they're thinking about not only the health of the US economy, but also the softness that we're seeing in the labour markets so far. Elsewhere for the UK will be in focus. Again, the employment market will be critical. That'll come through tomorrow, where we have been seeing some cooling in the UK labour market. It's been a concern for the Bank of England and has been a dilemma whether they need to lower rates more aggressively in the future. So more clues coming through this week on that. Towards the end of the week, we'll get the first estimate of the third quarter UK GDP result, which will be important thinking ahead of the autumn budget towards the end of the month. For China, there'll be a whole host of different economic data coming through, from retail sales, house prices, industrial production data. China's economy has been challenged over the last 2-3 years. It's really underwhelmed. You've had really strong exports, but consumption from the consumer has been really poor. And despite the stimulus measures that have been coming through over the last 18 months, there's yet to be really any real strength coming through. So we'll be looking at that data this week to see if there's some improvement coming through. That's all for today. Thank you for watching, and we'll see you in Week in Markets at the end of the week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.